So, as we move into the new year, I think it's incredibly important to recognize what this year represents. Where 2017 was all about the hype cycle, and 2018 was more of the hangover and recovery, 2019 is going to be a transition year. And so in one of my previous videos, I talked about how security tokens were my pick for the most important thing we'll see in 2019 regarding cryptocurrency advancement and adoption. So let's spend some time talking about some common misconceptions and really try to break it down very easily so that you're better equipped going into conversations and watching other videos regarding security tokens. Hopefully by the end of this video, you'll find that they're not as scary as some people are making them out to be. And actually, they're kind of exciting. So hopefully you'll be as excited as I am. Welcome to Ready Set Crypto. This is your brain on blockchain. So right off the bat, let's address some of these common misconceptions and really what I've seen other YouTubers talking about regarding STOs. So one of the biggest and possibly most dangerous opinions is that the bankers and the institutions and the Bilderbergs are going to steal your crypto away from you or somehow take over the crypto industry. The easiest way to respond to this is that STOs and security tokens are not crypto. They're not part of the crypto industry, so far as I can see. They utilize blockchain, and you'll have security tokens built off of token protocols like ERC20, but crypto as a whole represents decentralization, decentralized networks, and really everything that Bitcoin stands for. Security tokens are centralized by definition. Security tokens represent equity. They represent shares in a company. They may also represent assets. These are things that we really don't see blockchain cover right now. No, an ICO is not an equity stake in a company. An ICO is meant to be a utility token, similar to an arcade token. There's also payment tokens, cryptocurrencies in their purest form, like Bitcoin. So hopefully you can see that security tokens are not meant to usurp what Bitcoin has built with a payment network or Ethereum has built with a utility network or information network. And instead, they're really just a digital wrapper for security. That's it. That's really all they are. And as a reminder, a security is just an investment in a common enterprise with the intention to make profit off the efforts of others. That definition hasn't changed in nearly 100 years. And while we've seen new exemptions for private capital formation over the past 100 years, the core essence of what a security is hasn't really changed. So what are security tokens trying to do? Why are they different or interesting, or why should you care about them? Well, the simplest way to look at it is that by and large, private equity is managed by paper and fund managers and middlemen, if you want to think about it that way. Security tokens are an electronic wrapper for that process. They're baking compliance into the token itself. This is another common misconception I see, is that, security tokens will have a tough time with compliance because, what if you have different jurisdictions and all this sort of stuff? No. When you build a security token, you bake in the compliance, you bake in the conditions that it must abide by into the code that comprises it. That is complicated, and that's why it's going to take some time for security tokens to come to light. And that's also why we haven't seen anything like this before, because we didn't have the infrastructure, i.e. a blockchain, in place before that could definitively track ownership electronically with copyright protection. Now that we have that, this opens up a world of possibilities for global liquidity, for private equity. So when you ask the question, what can securities do for crypto? Well, it brings compliance, it brings recognition to the space. It shows that we're willing to work with the laws of the land. But really the more important question to ask is, what can crypto do for securities? That is what we're talking about here. That is the opportunity. That is why I reject the notion that this is some hostile takeover of crypto, because no, it's going the other way. We are taking over securities. We are bringing them into this century. We are directly attacking the institutions that have, for a long time, made this process expensive, convoluted, and slow. Yes, there will still be aspects that will be convoluted, expensive, and slow. You will still need to abide by the regulations. You will still need to perform things like audits. You will still have acts of compliance in place, such as for a Reg D offering, there's a 1-year lockup. But hopefully you see that this is more than just some sort of niche of crypto. This is a full-scale assault on an existing aspect of traditional finance, in the same way that Bitcoin did that as well. That is why I'm so excited about STOs, and that's something I don't feel like a lot of people understand completely, especially the people who try to tell you that STOs are some sort of marketing ploy to distract you from owning cryptocurrency. That's ridiculous. Given the choice between a utility token and owning actual equity in a company, I will choose equity every day, no question. Because with the utility token, I don't have investor protections in place. I have no investor rights. It's magic internet money for all intents and purposes. Whereas with the STO, there are investor protections put into place. I'll have things like voting rights, maybe profit sharing, and I know that I have a piece of the company that I'm investing in. Furthermore, I feel that companies looking to tokenize equity are very unlikely to also have utility tokens. It's either going to be one or the other. I don't think that's a marketing ploy. I think that's an opportunity. And anyone trying to dissuade you from that is being malevolent. You should always try to own equity in a company. And look, another big misconception, or rather statement that I see repeated over and over again, is that STOs are going to be the playground of the rich. As it stands, to invest in the current crop of STOs, you're going to need to be an accredited investor in the US. The reason for this is that Reg D is the easiest from the perspective of the company tokenizing their equity with regards to the offering. It's the most common way to privately raise money without the burden of disclosure and audit requirements of a public offering. Again, these offerings are restricted to accredited investors and are not allowed to be publicly advertised. So yeah, that criticism is correct under the context of a Reg D. But Reg D is not the only offering type. As we see STO issuance platforms build out their services over the next year, as we see STO exchanges building out their trading platforms, there seems to be two major directions emerging right now that people seem to be betting on: Reg D or Reg A+. So as a quick primer on that, Reg A+ is often referred to as a mini IPO, or initial public offering, also known as an S1 filing. Under the context of a Reg A+, a company can raise up to $50 million. It can both test the waters and publicly advertise their offering. Up to 30% of the securities can be traded on an SEC-registered exchange in the first year. There are, however, heavier disclosure requirements, including an offering document and yearly reporting to the SEC. Now, what's important is that this is not restricted to any investor class. Another SEC exemption I think is worthwhile talking about is Reg CF. Regulation CF, or crowdfunding, is a special private offering that allows companies to raise up to $1.07 million in a year on an SEC-registered platform. Investors are subject to investment limits based on their income and net worth. There are light financial and information disclosure requirements. So getting back to what I was saying before about Reg D versus Reg A+, I'm generally more skeptical about the former, Reg D, simply because the limitations are not congruent to where I see this industry going. I believe that Reg CF and Reg A+ offerings are well designed for fundraising with the kinds of engaged communities that the best crypto projects attract. This is where I anticipate a land war between issuance platforms such as Harbor, Polymath, Seed Invest, Republic, PrefLogic, because again, building platforms for Reg D is quite different than building a platform for Reg CF and Reg A+. But there is a concern that I do want to acknowledge. We are still in a transition period. It's my, I believe, justified fear that security tokens are going to be riding the ICO wave of easy capital, and the initial ones are going to be littered with unsavory investment terms. I want to make it explicitly clear that the SEC and compliance and regulations exist to protect you against scams. They do not protect you against bad investments. Those are two very different things. So the name of the game for the early phases of the STO market is buyer beware. You've got to review the terms of what you're investing in. Crappy offerings will probably outnumber the good ones for a time. But as we saw with the ICO wave, there will be really great companies with proper offerings, and they'll be publicized. They'll show what is possible with this space, and they'll encourage further growth and innovation. And to that point, I think a lot of the criticisms and general uneasy feeling about what this space currently represents with regard to things like Reg D and the other offerings is that legal and technological and legislative innovation is still required to create more benefits for security tokens and more interesting investment structures. As I said, security tokens in their current form, as they currently stand, are really just a digital wrapper for existing securities and existing assets. We're still at the point where we're still trying to navigate how to conduct the most basic offerings, given the existing state of SEC regulations. But it's my hope that we'll spend more time focusing on how we can create offerings that actually benefit from the blockchain beyond just supposed liquidities in areas like transparency, governance, reporting, etc. These are all things that the blockchain is extremely good at, and the SEC would be wise to work with the structure of the blockchain to ensure compliant offerings and work to build even better ones. If we're able to show all these benefits, we might actually be able to convince the SEC to allow for more interesting blockchain secured structures that are only viable because of the transparency and security that blockchain-based securities allow, like splitting up tokens into more granular assets under the same class of tokens, interesting cash flow and royalty structures that are secured against IP, hard assets or other cash flows via the blockchain, or who else knows what other kind of interesting financial engineering we can do. There's a lot of possibilities that open up with this. Again, in the most basic sense, we're turning a process that is very analog right now into a digital process. And hopefully that gets you as excited as I am, especially once you consider how much of the world's wealth is locked up in private equity. When we look at something like Bitcoin and looking at fiat currency and basically liquid wealth like that, cash as it stands makes up only about 30% of the world's total wealth. The vast majority of the world's wealth is locked up in equity. So in some sense, STOs, security tokens, represent an even bigger opportunity. With security tokens, we're now able to access essentially all of the world's wealth and utilize a blockchain structure to make it more efficient, make it faster, make it more secure, more transparent. That's the ultimate goal of what we're trying to do here, regardless of the industry that you're looking at. I think a good summary of what basically I've been talking about this entire video happened in Bloomberg yesterday. The article, entitled "Tesla Stock on a Blockchain Offers Hint of Where Crypto's Headed," had the major implication of what will happen if the SEC can't stop Tesla from tokenizing their US shares internationally. If that's the case, the world stock exchange market will be reshaped drastically. Now, even if this is not the ideal end state, this will show the world the power and efficiency of tokenizing real-world securities on public blockchains. EU residents will be able to trade US stocks at fractional shares with real-time settlement. To understand the business model that they talk about in the article, You'll be able to purchase US stock company shares using tokens on the Ethereum network. And you could imagine using these tokens as collateral to borrow the stablecoin DAI, once multi-collateral DAI goes live later this year. Now, the middlemen banks and brokerages are not needed to buy stocks on margin. I think this is the banker's worst nightmare, that we're looking at a recession at the same time their position is being undermined by real financial engineering like this. This is why we do what we do, and why I get so excited about what this year represents. So definitely this space is nebulous. We're still trying to figure things out. Everything is kind of like the early days of crypto. We're piecing it together and we're doing the best we can. But hopefully I've convinced you that outright FUD, outright denial or fear or anger of this space of security tokens is really misguided, is really naive. Instead, embrace it like we have with cryptocurrencies. Embrace that this is part of the future that we're building together. And then you'll be able to see things a little bit more clearly. Of course, don't listen to just my opinion on this. Build your own opinion. That's the other most exciting part about this entire space, is that suddenly there's a democratization of what was traditionally locked up behind fund managers and Wall Street and banks and all this sort of stuff. We're taking ownership of our finance. We're taking ownership of our economy. How cool is that? We're proving that we don't need these middlemen for a multitude of reasons. It's truly freeing. And that's why security tokens are the thing I'm most excited about in 2019.